Hey there, everybody. Thomas Wood with Basecamp Trading. It is Wednesday, February 15th, and we're going to take a look at the gold trade from earlier today. I sent this out on Twitter and StockTwits, and we had it in the trading room. Worked out really well. Now, you're probably going, how did it work out really well? You were going short. Well, this is why having targets are very important. So, if you look at what gold did, when we first came into the room, we were looking at gold inside of this pennant pattern, okay? We were just like this inside the pennant. And we were looking for a break through the lower end or the upper end of the pennant because we had neutral momentum across the board. Well, we ended up breaking down. So that gave us a break point at about 1225, 1224.8, right around there. We ended up breaking down and accelerating straight through the floor all the way down to a low of 1217, or call it 1218 for simplicity's sake. So you're talking about $700 to $800 a contract worth of a move. So not bad. Now, if you look here, and if you've watched any of our other videos or any of the other videos I've done, you and I always talk about using significantly over and undervalued on a 240-minute price chart to know when a move is extended for the day. So what's that look like? Well, here's a 240. Significantly overvalued is upper red price bar segment. So there, and then pull back. There, and then pull back. Significantly undervalued is lower red price bar segment. And you look at where we stopped today, it was significantly undervalued, lower red price bar segment. It went right down into it, said, okay, now we're extended, and then reversed back up. Now, the other thing we were looking at, we don't want to just blindly close a trade that's significantly undervalued, because a lot of times, well, not a lot of times, but sometimes what will happen is it'll go significantly undervalued and it'll keep pushing even further and further. So you can allow a trade to run. So how do we know that that's when it's time to exit? Well, we're trailing our stop down, and if you look at the shorter time frame charts here, this is a 500 tick chart, all right? Look at what the momentum ended up doing when we were hitting significantly undervalued. Okay, so here's the initial channel breakout. This was consolidation, and then a secondary breakdown from there. But look at the momentum. See how we strengthened? If you look at two pivot lows, here's the first pivot low right there, and the second pivot low, indicator line significantly higher, histogram significantly higher. So that's what we call bullish divergence. And we ended up making a double bullish divergence where this pivot low was even stronger on indicator line and even stronger on histograms. So we had strengthening bullish momentum with significantly undervalued prices. That's when it tells you, okay, trail your stop just down above the previous bar's high, right around here, and you're getting out at about 1218.9, 1219 area. So right near about a point above the lows. All right, so make sure you pay attention to the longer time frame charts and look at those value levels. How far extended over and undervalued are you? Because, or you can just look at the average true range on the day and see how extended you are based on what the average move of the market is. All right, that's all I have for you for today. I will see you in the trading room bright and early tomorrow morning. And until next time, happy trading.